All right, welcome back. So there are some stocks which are buzzing around. HDFC Bank is one of them. That's the bottom of the screen. Ahead of results, the stock is up a little bit. ACC is the other one which is reporting numbers. That's down about 1% or so. Sunil Subramaniam is CEO of Sundaram Mutual Fund and he's joining in on the show right now. Sunil, thanks very much. Last year we were on the show, this month earlier, we didn't have the inflow number into mutual funds from into equity funds. We have that number now. I was just looking at that. So equity funds from ELSS equity works out to about close to 8,300 crores in the month of March.
Yes.
I mean, it's kind of gone right back on big numbers, right? Because things have dropped off quite a bit, both in Jan and Feb. But March, it's come back quite strongly. How would you read this number? Because this is also the year-end number, the last month number, yes.
Yeah, the one is that that's the month a lot of people who haven't planned their tax come in to rush and do it in March. Second is that I think the election results have given a clear direction that the government is on track in terms of the people in terms of post-demo as well as how they have perceived it. So I think the domestic investor is very much glued on to the Indian economy and what government is taking steps. So the positivity in terms of flows are related to their positivity on the government and the economic growth of India. So that's what the correlation I would draw.
Okay. Sunil, what's your sense in terms of the private banks, the numbers that have come out till now? Yes, DCB as well as IndusInd?
No, honestly, we think that we are reasonably okay with those. See, the thing is, rather than if you look at private banks and PSU banks, the key, I think, is the corporate wholesale lending book vis-a-vis the retail piece, right? So this is a corporate lending book which, thanks to the NPA scene and everything, which will be under stress and continue to show that for a few more months, as I read. But at the same time, the retail book, I think, from a guidance perspective, we are very happy with what we are going to see in the coming festival season. We see the strong growth in the retail lending book from all private banks, foreign banks, as well as from the NBFC space.
Any other ideas you'd want to share with the viewers? We spoke about what, 12, 13 days back. Anything on your radar? Because I mean, we're getting into the thick of earnings.
One thing which we are working on, one thing we are working on is that, see, for us, this is a beautiful period. This month of April and first of May, because full year results come out, I think it's a lot of uncertainty in the markets, and basically we see the stock prices will be a little bit volatile. At the same time, given the developments internationally around, say, the visa front, around the FDA front, given the dollar strengthening, given the news around NPAs, we feel that sectors like, say, IT, pharma, corporate lending, which I refer to, and even infra, where it's only a government-driven infra push that is currently happening, but the private sector, we see stepping in, let's say, 12 to 18 months from now. From a future growth perspective in terms of EPS growth, these we feel are definitely undervalued related to the future growth potential. So we feel it's the right time to accumulate these from a, say, 3 to 5 year perspective. In fact, we've just got approval from SEBI and we'll be filing for a value fund launch in this market. And I think that fund is slated to launch in the first week of May. And we are going to actually focus on these 3 or 4 sectors that I mentioned. And basically, it will be roughly a 4-year fund. And we feel it's a brilliant time to pick up these. If you have a holding period of, let's say, 4 years in your mind, actually brilliant value in these sectors.
Okay. Mid-caps, do you think that they've become a bit too frothy?
See, froth is always a function of the flows, okay? So if driving up is domestic flows. You know, while FII flows have about 68 to 80% large cap orientation, domestic flows are far more diversified, and as much as 30 to 40% of flows come into diversified funds which have a mid-cap allocation and then into pure mid-cap funds. So money which is coming in needs to get deployed in that space. So there's a lot of froth from the perspective that mutual funds are sitting on a lot of cash inflows, as Prashant was just mentioning. Even the tax saver funds, by and large, tax saver funds are in the diversified space. But 8,000 odd crores has come in the last month. So my perspective is that people are buying into growth, putting money into mutual funds, mutuals are buying growth. Now mid caps, the key is that everybody is looking at it as frothy. You're comparing it to large caps and saying frothy. I would actually say you look at from the EPS earnings growth perspective of mid caps versus large cap. So in our internal estimates, large cap should grow 17 to 20%, But we expect mid-caps to broadly show 25 to 30% growth. Now you tell me, if it's 17 to 18% versus 25 to 30%, should both of them trade at the same valuations, or should mid-cap be slightly higher? So our perspective is that some of this froth is actually, betting on the future growth prospects being better. And when you buy individual stocks, yes, there is a chance that they might disappoint based on market expectation. But when you're buying a fund and the fund manager is using both his
I think that line froze. Very briefly, value fund? I mean,
yes, absolutely. That's the point I'm saying. So that's the best. The proof of the pudding is the eating, Prashant. When I tell you that we believe there is value in this, you say, Sunil, you're talking this, but your fund manager is acting on it. Now, yes, obviously, even in our diversified funds, there is a component which we look at long term, and we are buying these. But what better way to explain this? And we are actually going to pitch this to our key distributors to say that if you are willing to wait for, let's say, 3.5, 4.5 years, then there is value, and you can get very good wealth creation by picking good quality stocks.
And this is market cap agnostic, right, Sunil? This is market cap agnostic.
Yes, it is market cap agnostic.
Good luck with that. When the fund launches, I hope we can chat again and maybe